what is capital market, why capital market is important, and what are the functions of capital market. So today we are discussing these topics in detail. Hi, my name is Deepti Sharma and I am going to tell you about what is capital market and how the capital market is important and what are the various types of capital market. So we will discuss in detail. So first of all, we will understand what is capital market. So capital market are financial markets that bring buyers and sellers together to trade stocks, bonds, currencies and other financial assets. Capital market includes the stock market and the bond market. They help people with ideas become entrepreneurs and help small businesses to grow into big companies. Why is capital market important? Capital market are important because they finance the economy, allocate risk and support economic growth and financial stability. In the US, capital market funds 72% of all economic activity in terms of equity and debt financing of non-financial corporations. So now we need to understand what are the functions of capital market. The capital market helps in the proper allocation of resources from the people who have surplus funds to the people who are in need of capital. So we can say that it helps in the expansion of industry and trade of both public and private sector, leading to a balanced economic growth in the company. What is capital market structure? Capital market structure is made of primary and secondary markets. So now we are going to understand what is primary market. In the primary market, also known as the new issue market or fresh issue market, only IPOs, initial public offerings. So the name indicates that initially they issue the securities or newly issued shares sold only in the primary market. The primary market does not include borrowed finance in the form of loans from financial institutions, because when a loan is issued from a financial institution, it implies converting private equity into public capital. This process of converting borrowed capital into public capital is called going public. So now we will understand what is secondary market. In the secondary market, all the existing securities are trading in the market. In secondary market, securities are not issued or traded by the company to investors. Existing investors sell the securities to other investors. Sometimes the investor needs cash and another investor wants to buy the share of the company. As he could not get directly from the company, then both investors can meet their demand in the secondary market and exchange securities for cash through a broker intermediary. Now, what is the example of capital market? Examples of capital markets are highly organized capital markets, which are New York Stock Exchange, American Stock Exchange, London Stock Exchange and Nasdaq. What are the components of capital market? Capital market are composed of suppliers and users of funds. Suppliers include households through the saving account they hold with bank, as well as institutions like pension and retirement funds, life insurance companies, charitable foundations and non-financial companies that generate excess cash. So friends, now we will discuss what are the major instruments traded in the capital market. 5 types of instruments that are traded in the capital market. So number 1, equities. Equity securities refers to the part of ownership that is held by a shareholder in a company. In simple words, it refers to an investment in the company's equity stock for becoming a shareholder of the organization. Now, the second type is debt securities. Debt securities are financial assets that entitle the owners to a stream of interest payments. Now, derivatives. Derivative instruments are capital market financial instruments whose values are derived from the underlying assets such as currency, bonds, stocks and stock indexes and so on. So now friends, something very interesting, which is exchange traded funds. So what are exchange traded funds? Exchange traded funds are pool of the financial resources of many investors which are used to buy different capital market instruments such as shares, debt, securities, bonds and debentures. Foreign exchange instruments, the fifth type. Foreign exchange instruments are financial instruments representing on the foreign market. It mainly consists of currency agreements and derivatives. So friends, now we will understand who established capital market. The first capital market was created by the Dutch Republic, which offered to trade and sell stocks. Now, what is the largest capital market in the world? Largest stock exchange operators worldwide 2022 by market cap of listed companies. The New York Stock Exchange is the largest stock exchange in the world. The New York Stock Exchange is the largest stock exchange in the world with an equity market capitalization of just over 24.1 trillion US dollars as of August 22. So now friends, we will understand what are the three sources of capital. Some of the top ways to raise capital are through angel investors, venture capital, government grants, and small business loans. Now we will understand what is capital with an example. Capital can be any financial asset that is used. The money made from its current activities is shown as capital on a company's balance sheet. Some examples are the money in a bank account, the money from selling stock shares, and the money from selling bonds. What are the three capital market instruments? Options, swaps, rights, exchange traded funds or commodities. So friends, now we will discuss what is the difference between capital market and money market. As you all know, in the money market, only short-term liquid financial instruments are exchanged, whereas in the capital market, only long-term securities are dealt with. Capital market plays a significant role in the growth of a country's economy, as it provides a platform for mobilizing the funds. So now we will discuss what is hedge fund. So what do we understand by hedge fund? The name hedge fund originated from the hedging techniques used by the firm of these funds, where the manager held cash assets expected to appreciate in price while also shorting assets expected to depreciate in price. So friends, today we have discussed capital market concepts. Now we will discuss in our next video what type of interview questions has been asked in capital markets and investment banking and in the leading KPOs. To get the latest updates, please hit the bell icon and do not forget to subscribe our channel, like it, so that you can get the latest updates and videos. So friends, stay in touch. Have a great day. Bye-bye.